Hello, my name is Steffen Pauls and I am the CEO and founder of Moonfare. Welcome to Deal Talk, where we bring you face to face with the top minds in private equity. Moonfare is the largest digital platform for investing in private equity. We offer carefully curated funds with remarkable low minimums. Joining our community of world-class investors is free and only takes a few minutes at moonfare.com. We do this to give more investors direct access to one of the most attractive global asset classes. With our Deal Talk webinars, we aim to democratize access to the knowledge surrounding it. Enjoy. My name is Steffen Pauls and I am the founder and CEO of Moonfare. Welcome to Moonfare's Deal Talk session today, where I interview some of the best entrepreneurs and deal makers in the private equity world globally. Today's guest hardly needs any introduction. Robert F. Smith is one of the most successful technology investors and entrepreneurs in the world. He is the founder, chairman, and CEO of Vista Equity Partners, which he founded in the year 2000. Since then, Vista has invested in hundreds of companies worldwide and currently manages over 100 billion in assets. Their portfolio employs almost 100,000 people and serves more than 1.7 million customers. Truly impressive numbers. Besides being an entrepreneur and investor, Robert is also a philanthropist and an outspoken advocate for diversity and inclusion. We'll talk about all this and more in the next hour. Robert, it's so fantastic to have you here. Thanks so much for your time.
Well, thank you, Stefan, for inviting me, and I've been really looking forward to this conversation. You are a heralded person in a private equity community, and really excited to get on this video with you.
Thanks so much. Really appreciate it. Look, Robert, when I was preparing for the interview, I learned, as always, many things. But among others, what struck me is that you are a chemical engineer by training. You even won a couple of patents, including for a brewing process that makes coffee foam. So now chemistry and private equity seem to be two distinct worlds, but there seems to be some overlap with respect, for instance, to how you approach problem solving. Where would you say is the connectivity?
Yeah, I think you got it. It's a problem solving, and it's again so fun to spend time with you and hear that you're in Munich. I spent a fair amount of time in that area working with the company VMF, which was owned by one of your prior companies, and that's where we developed this first microprocessor controlled coffee brewing equipment. I finished my degree in chemical engineering, but during my time in college. Was working quite a bit with a company called Bell Laboratories. And Bell Laboratories, as you know, was one of the early pioneers, principally in telecommunications technologies. One of the areas that I worked in was in semiconductor manufacturing and testing. And it was some of that work that I actually designed and developed. Some of the work that actually went into the coffee machines, which were used in the etching process, part of the etching process for the filters, and ultimately which led to some of the unique innovations that came in the brewing and et cetera. But I think, most importantly, as an engineer, one of the key things that you learn is how do you take, complex problems and break them into discrete solutions and come up with what I call engineered solutions that are repeatable, sustainable, and have low incidence of failure. And that is a methodology that becomes very well ingrained in an engineer's approach to life. And as I then decided to move to a next phase of my career from being truly an applications engineer to going into finance after a stint at business school. I joined Goldman Sachs, worked in the mergers and acquisitions department, and came to discover that many companies, in this case technology companies, were on the precipice of engaging in the utilization of computing technologies. These computing technologies were being proliferated principally because there was access to low cost compute in that case, Moore's law had kicked in. They were able to distribute on-premise compute systems. But the thing that those systems actually didn't have a lot of course, was software. That at the time originally introduced, they were solutions, and the software, the hardware, the firmware were all pretty much integrated and managed by a team. But ultimately, there was a separation of the hardware and the software. And I'll call it most of the value really inured to the benefit of the software and the software providers. And I thought in evaluating this that the value in the enterprise world of software, this again business, was going to inure much more to the benefit of these software providers than consumers. Consumers can be fickle about what they buy and not buy, but in businesses, you make very studied decisions on what's going to create a long-term return to the stakeholders, the shareholders of those businesses. And so, enterprise software again continues to be the most productive tool introduced in our business economy over the last 50 years. And businesses, enterprises, are typically, found that their next best dollar purchase is to buy more software to enable their employees or their business operations to operate much more productively, much more efficiently. And as a result of that, I felt that would be a good place to start investing capital. And that's when I started Vista, really focused on doing buyouts and enterprise software, focused on these mission critical, business critical business solutions that now have proliferated globally. So, that's how the connection and the tie come together.
Well, you mentioned your time with Goldman back in I think it was in the mid 90s or so, where you advised IBM and eBay and Apple and other tech giants on mergers and acquisitions. How do you remember that period?
Yeah. It was a wonderful period of, and I'm going to say this, discovery. Discovery about the power and utilization of A, software on the one hand, and B, compute on the other. We were all starting to become comfortable with these computer devices that would at one point show up on our desk. And, the early days, of course, they'd be used for simple things like word processing. And then ultimately, you started to see the introduction of these spreadsheets, which became a major utility. And I think, at the early days, there were five, six, seven, eight, nine, 10 different spreadsheet providers. Some of which you remember, Lotus and VisiCalc and Multiplan and all those. But one that emerged ultimately was at that time Excel. Excel, because of the way they packaged the product with the operating systems, because operating systems were part of that new technology to come in, and how do you actually operate the silicon and make these systems work. And so there were useful applications that were being utilized, some in word processing areas, and you remember the word perfects in Word, and then there were spreadsheets. And ultimately, it was those spreadsheets that started to create a massive amount of productivity. Work that took, in some cases, months to prepare could now be done in a matter of seconds. And there, of course, had to be some training of employees, but once that happened, the productivity actually started to accelerate pretty dramatically. We at Vista, even today, measure the productivity of the software that our portfolio companies sell to their customers. And today, it's still over a 600% ROI. So when you think about almost any other investment that you can make, if you're a company, your next best dollar is used to buy more software, to train your people to use that software more efficiently, buy more applications or different components that enable that software to not only bring more intelligence and insights into your organization, but enable your people to action those insights more effectively. And we'll talk about, I know, Gen AI a little bit later in this conversation. But what I remembered was that hopeful optimism. And what occurred, and was actually quite fascinating, you all have all sorts of market pundits saying, "Oh, this software industry is going to grow at 8% and 10%." I remember in early 2000, software, generally speaking, was eighth, ninth, 10th largest industry on the planet. Is now the largest, and then became the fastest growing, and is still the fastest growing. And even when we think about Gen AI, at the end of the day, that is, it's software. And it's because it has such major productivity on the one hand, and utility. By utility, I mean it applies to every single industry. And you can utilize components of it to create productivity, to enhance insights, to enhance understanding of markets and opportunities, and in many cases, create less uncertainty in supply chains and in understanding exactly what's occurring in some ecosystem that you might be trying to understand as a business executive. So, that time of expansion created major optimism, and then you saw massive amounts of capital flowing into the software industry generally, and specifically, we saw it, and I'll call it in two big categories. One was consumer, and of course, the big consumer companies. Some have come and gone, and some have had some staying power because, as you know, consumers are fickle. They some case doesn't matter what service they ride home in, so long as they're getting the lowest price. Businesses are looking for reliable suppliers who not only provide the product but services. And so one of the things that came out of that period of time, and it's kind of funny to think about it now, was, well, how do you actually sell this product? Well, you typically sold this product with a maintenance contract. Okay, here's the amount of the product, here's for the product, and you're going to pay me 20% a year for maintenance. What's that mean? Well, as we change the product, or it's operating on different infrastructures, databases, or there's different changes in operating systems, we will update your software for you so that you as a business don't have to do it and don't have to bear the burden of all that infrastructure to keep people up to speed on how these software products evolve. And so that model became quite an interesting model. So the next thing that came out of that marketplace was this new business model, which had some form of recurring revenues. And those recurring revenues initially were maintenance revenues. You sold some product for a license, and then you would pay some maintenance. Well, over time, we started evolving that model to say, well, rather than saying a one-time, license charge and maintenance charges that you had to renew every year or 3 years or whatever it might be, let's go to a subscription model. And that emerged this thing called SaaS, software as a service. And that subscription model would include, of course, a license and some maintenance. And we could deliver that in a business form model which as an investor gave you visibility. One of the things that distinguishes the software industry from many other industries is you typically have more visibility on what indeed, the customer base is looking for because they'll sign longer term contracts, and you'll have the ability to utilize, that visibility to actually enhance your financial position, invest more in the product development, and in some cases, use that visibility to actually to put different amounts of different capital structures on those businesses so you can now grow those businesses more effectively. So there was a whole lot of things that were happening in that period of time that created what I'll call a more stable business that you see today. 17 plus $1 trillion market, growing still, in mid-teens type areas. And it's because we have made some major modifications to a business model that started off as a license and maintenance model.
Look, it's fascinating, and in retro perspective, it's such a compelling story, and you are where you are for a reason. But one thing, Robert, that I find surprising, because I was with BCG in the 90s, and I, by the way, founded my first company in 1999. It was still pre the dot-com
Mhm.
crisis. You did the same, but in the year 2000, where
Mhm.
most of the entrepreneurs who were not successful decided to go back to Wall Street, and
Right.
you went on and came up with the idea of Vista. In these circumstances, why have you been so confident to go and set up your own company after leaving a well-paid job with Goldman?
I think again the insights that I garnered as an engineer when applied to enterprise software, the thing that I noticed, like you said, when I went to Goldman Sachs and I had a great opportunity to work with some great companies, which were my clients, Microsoft, Apple, eBay, Texas Instruments, Hewlett Packard. These are all kind of storied, Yahoo, all storied businesses in that part of the phase of technology growth. But I noticed that they all approached everything, differently. Things, the way they built their sales teams, the way they developed, product, the way that they went out and they maintenance that product or maintenance their customers. All of the things that I looked at, I said, when I looked at some really, strong businesses, they have started to standardize processes for training and development and hiring people and product development and pricing and all those sort of things. I said, if you took some of these standard procedures and operationalize the standard procedures and then apply them to, irrespective of the size of the company, a $30 million company or $1 billion company, you could actually create improvements. And that's what basically gave me the wherewithal and the idea to say, we should create a group. In this case, was a value creation group that has a set of subject matter experts. I have almost as many people in that group as I have in the investment team, really focus on driving operational improvements in businesses. In some cases, it's operational improvements to enhance the growth rates of the businesses, finding the right salespeople, deploying them properly, training them properly, creating the right incentive structures, to grow the business. In some cases, it's a reduction of cost, elimination of waste. How do you deliver, that product in a more efficient format to a broader group of customers at a lower cost over time? How do you then also, consolidate in many cases, the infrastructure of that organization? How do you migrate from on premise to on cloud? I mean, all of these are components and elements that make up our value creation team's practice. Our value creation team has well over 100 of these best practices that they have to evolve, of course, because technology platforms evolve and approaches to the market evolve. It's a major migration. Of course, we went from on-prem to the cloud, and then mobile first, and now we're in another major migration, which is Gen AI first, right? So all of those elements have to be factored in as you're driving operational improvements and performance in businesses. And I thought, what better way to do it than what ultimately was a pioneering way of building an operations team that has specific functional areas that they focus on, develop specific subject matter expertise, and then apply those really intentionally into the enterprise software companies that we have a chance to acquire or invest in.
Robert, it's funny because there's this famous quote from Henry Kravis from the early 2000s when he said financial engineering is dead.
Mhm.
And what he meant is exactly what you're laying out or you're foreseen. You saw something that other people didn't see, which is that out of the three core value levers that we have in private equity, which is EBITDA expansion, multiple arbitrage, and leverage, the multiple the EBITDA expansion would become by far the most important source for value creation. And building the system of operational experts and then with a clear focus on software is absolutely unique. Look, let me talk about the past 18 months. They haven't been easy, in particular when it comes to tech investing. Uh, what are you seeing on the ground? Have the famous gap in terms of price expectations between buyers and sellers, have the expectations come closer together?
It's a great question, and I'll give you just one overlay on the earlier comment. There is one interesting dynamic in the world of enterprise software that is a little different. That dynamic, it still is a winner take all, winner take most markets, and so while there can be a tremendous amount of emphasis that is driven on the three areas that you outlined for value creation, one of them is how do you go capture market share quickly and effectively. When you hold customers, again, the retention rates, net retention, gross retention rates, those customers, because these businesses are, zero capex type businesses, you have the ability to extract long-term economic rent from customers because you create a tremendous amount of value for them. But you have to go capture them. So there's an important aspect of in enterprise software in particular to actually going and creating what I call product superiority. You have to actually go out and get the customers and demonstrate product superiority. It's the reason why Excel exists and Lotus does not, or and VisiCalc and Multiplan do not. And so there's that overlay that you have to take into account as you're making your acquisition. So when you sit back today, to answer your question about the last 18 months, what you have to discern is which companies have the potential to have product superiority or are already the superior product in the marketplace. And you have to look at, the different levers of, gross retention, net retention, and utilization. Are your customers utilizing full capability of the products that you are selling them? All those are important factors. In the public markets today, we've seen a very interesting dynamic in the last 18 months. A lot of it's driven by, I'll say, the real appetite around Gen AI. Okay, so once there was the introduction of generative AI into the marketplace, it captivated the attention, and a lot of the investment dollars started flowing in multiple ways in that direction. It has a massive amount of utility, high productivity output, which we'll talk to a little bit later in this conversation. But what has happened in the public markets is it has actually dampened the public market enterprise software companies' valuations relative to other companies. And so, for the first time in quite some time, when we had loose monetary policy, et cetera, enterprise software companies have become affordable and more affordable in the public markets. And so, what you've seen us do over the last 18 months or so is a lot of take privates in that marketplace. We look for companies that have that product superiority, execution excellence capabilities, but have now fallen out of favor in some respects by the public market investors because they're now turning their attention to call it the new thing, which is Gen AI at this point. And so we think that in buying those companies and bringing operational improvements to them, because of the retention rates with those customers, we should be able to infuse those businesses with Gen AI capabilities and capture more economic rent by providing tools and solutions to those customers through our portfolio companies that now will accelerate their growth and accelerate their profitability. So that's what's happening in the public markets, public to private. In the private market, there has been, as many know, a dampening of activity. We haven't seen as many transactions, especially in the middle market and cap funds. We've seen with our foundation fund and Endeavor fund, again, you're looking for A+ assets that are mission critical, business critical. And we see in some cases a lot of competition around certain of those businesses. So it's incumbent upon us to make sure we look and find deals that others aren't looking at. We have well over 100 billion in assets under management, but more importantly, we've got over almost 25 years of relationships and investments in doing only enterprise software. So entrepreneurs and owners and managers of these private companies come to us and they say, look, we have heard and we have understood through your team the value of these best practices that you deliver through your value creation unit. I want to now, avail the company and avail myself of this, and we're ready to do a transaction with Vista. What's interesting, often it isn't. We're ready to do a transaction. We're ready to do a transaction with Vista, and so we look to leverage that market capability, market prowess, spending time with organizations and especially in our middle market funds, our foundation fund and our Endeavor fund, to actually drive those sorts of relationships and create value in those companies in a unique way because of the size of the platform, but deliver to smaller companies. And we think that's going to be continue to be a sustainable advantage for us.
Look, Robert, you know this. We are all fortunate to witness another mega technology revolution that will probably surpass the internet and the iPhone, everything what we have seen so far in the tech space. Famous quote from Bill Gates saying, referring to this revolution by saying it's a lifetime chance of an entire generation. I have 4 children, so I'm of course thinking about their future. So that really touched me when he said it. It was some 18 months ago, as you know, on November 30th, when OpenAI or ChatGPT became live. ChatGPT in their last round, public numbers here, was valued at some 86 billion. Yeah, we had, just seen, I think a couple of weeks ago, Elon Musk with his XAI valued at 18 billion, just 12 months after its founding. There was a huge round earlier this year with Anthropic, and so on and so on. McKinsey predicts that generative AI alone will lead to annual productivity gains of some 4 trillion US dollars. To put this number into perspective, this is as much as the entire GDP of Germany. Now, applying what you said earlier, your investment methodology, your deep understanding of tech, your investment experience, if you apply it to the generative AI space. What is your view on these large language models and their evaluations? Will these horizontal layers really provide the use cases everybody is expecting? Or will the world more be divided and conquered by vertical specialized models that always have to be adapted to specific company needs?
Mhm. I think it will be more of the latter. And let me unpack that in the way that you frame the question. These large language models will find great utility in the consumer segments. You and I will be able to make all forms of uh, entertaining engagement dynamics, some of which can be commercialized. They may be in the form of movies or shorts that we can leverage some of these tools to manage that through. Because of the amount of data, the availability of that data, and how that data can be accessed and utilized in these models and how they're trained, and then ultimately how they're utilized in some inference capacity on existing devices that we have or platforms that you and I use day to day for home use or knowledge or information around our lifestyles. With all that said, what most people need to understand is the one thing about enterprise software. If it was managed properly as a company, they typically have sovereignty and dominion around the data. And those data sets are unique in many cases in terms of the workflows, the actual data that I always say artisans out of them every single day. And if you manage those properly, the way we do it, managing our value creation team, and the way we do our contract administration process, we have all these unique data sets that no one has access to. These large scale LLMs don't have access to these data sets. And in fact, if you want to leverage them, you actually have to have some LLM that references these data sets. You can call them in form of a vector database that then can deliver a set of outcomes that are and use cases that are actually applicable to the problem that's being discussed, okay, or the problem that's being addressed. Some cases it might be a simple thing as how do you manage a trouble ticket for a certain environment. In some cases it is how do you actually deliver a solution set to a customer base or to a customer that has a specific configuration in the way that they're utilizing their technology or the configuration in the way that their supply chain might work. Well, that data doesn't exist in outside of those environments, and so you have to have again those data sets that have that data that can be utilized. And so how I got to the answer here is there will likely be a series of I'll call it vertical market, in many cases company models that are inference models that are utilizing specific data sets that have been developed over the last 20 and 30 years and that are owned by enterprise software companies. And so that's how we are utilizing our capabilities. Today, we own 86 enterprise software companies. And the ability to utilize those data sets to drive inference models on two areas in particular. I'll call one area is product development. How do we develop a product that we can now sell to our customers that enable them to be more productive, Gen AI enabled, or for them to enable their customers to become more productive. And so that's where a large portion of our efforts are being driven. Today, we're about 70+% of our portfolio companies have either product in market or product under development. And by the end of the year, 100% of our companies will have some Gen AI enabled product in market or Gen AI enabled product in development that we're going to look to deliver and deliver to our customer set and if not today, then over 2025. So that's one category. The other category is utilizing these call it code assist, code generation capabilities to make our programmers more efficient and our code development more efficient. I'll give you a couple of use cases in a second. What that enables us to do is manage one of the biggest challenges that we've always had in enterprise software is a lack of developers or lack of enough developers. You know, you stated we have 100+ thousand employees worldwide. We seem to always have 5, 10,000 open recs for developers. And so if you actually apply these Gen AI enabled code development tools, it actually reduces the number of open recs that you need and actually increases the productivity of individual developers. And just to give you real time measurement of those employees, call it 60+% of them are developers. we are saying we now have deployed some Gen AI code assist over 100% of our portfolio companies. So we're testing this across all the companies. We're getting productivity between 10 and 40% per developer. Okay, so these developers developing different rates and capabilities and proficiency. But that's sort of productivity we're seeing today as we speak here across our portfolio companies. And so from that instance, we're saying, listen, we can now think about, as you now take these instances and examples and drive them into systemic infrastructure, can you capture that sort of productivity at those levels to develop new products or to reduce the cost of support and maintaining existing products? So those are the two categories that we are focused on. And then, of course, at the Vista level, within Vista, we're utilizing Gen AI tools to enhance our investing capabilities, which do everything from evaluating what companies are out there, what sort of best practices have been effective at what levels, and then things like how do we utilize it to be more effective at doing everything from analyzing the current state of existing businesses or in the due diligence phases. So we're building out specific modules there that are Gen AI enabled, inference related, or inference enabled that we can now utilize in our own, call it, sandbox of data for with now 20 plus years of operating in this space.
But Robert, then I have a follow-on question because following your line of reasoning, would you underline the following thesis that more and more these large language models become a commodity and only exclusive access to data, at least in the B2B world, will be the differentiator?
I have a sense that there will likely be, and this is just again my sense from what I'm seeing out there, a half a dozen of these large language models that will survive. Broad scale, call it in some cases $1 trillion market cap opportunities. And I believe the vast majority of those will be really applied in the consumer space.
Yeah.
I believe that we will have, smaller models that are going to be utilized in specific, in some cases, companies for very narrow industries or broader business industries that they might be used across an industry as opposed to a general model applied into an industry. So I think what you'll see is, there will likely be, my opinion, an overbuild of capacity initially, like all exciting, gold rushes, right? That capacity will likely, manifest itself first of all in things like, GPU data centers. I think there'll be another wave where you'll see massive amounts of value for the infrastructure providers for that evaluation, and then people are going to realize, you know what, I actually don't need, in certain cases, this level of GPU capacity to operate in this specific industry. If I've got, the data and the use cases defined in ways that I don't need that level of compute capacity. And so then there will then start to be, smaller segments, small being still could be very large, that are utilizing very specific data sets and inference models to handle specific problems in an industry that will become call it, create massive productivity and utility in that industry.
Robert, let me ask you the following. I was recently in Israel and talking about or building on what you've just said. I met a very influential guy who's close to the government, and he had the following thesis. He was saying every large country, for security reasons, needs its own generative AI model that then can be fed with local government data, healthcare data, and so on. We, that was his quote, will never give our data to an open AI or an Anthropic or something that we don't control.
Yeah, I agree with that. And I am seeing it in the engagements that I'm having. I think every government is going to set up. Now, depends on, are they going to use OpenAI's instance or build their own? Don't know. Certain cases, they have the capability to build their own. In other cases, they will leverage. And there will be instances that are going to be used for what I call the citizenry of that country. In some cases, it might be national security. In many cases, it's going to be everything from how do you engage with the government to conduct all sorts of transactions as an individual, in some cases as a business, which might be registration, compliance, all those sorts of things, and healthcare data. Okay, I think those are areas, there'll be 4 or 5 of those areas that the governments are going to say, let me apply some Gen AI solution set into my citizenry and utilize that effectively as a way for me to leverage this. Now, in some cases, they're going to want to host the data themselves in their own data centers. In some cases, they're going to look for large scale hosting environments that have provided, I don't know, you want to call it some embassy type format, or where their data is embassied in some way that people feel confident that it's managed properly and not leaked out. So I do believe that's the case, but I put a lot of that in the consumer category. Whereas in the business category, I think industries, if you continue to think and know that still live in somewhat of a globalized environment, industries will likely standardize on different sets of LLMs. I doubt an industry is going to standardize on one LLM from one country. They're going to standardize on some LLM that they think provides a solution set for the optimization of that industry. And so I think that's where there's going to be some unique utility that's going to come out, and great opportunities, quite frankly. There's going to be a bunch of infrastructure overlays around that for security, cybersecurity, protections, controls, regulation, all that sort of stuff. But I think it's going to be those are the sorts of instances that'll create massive amounts of economic rent for the specific industries that they serve. But I do believe and agree with you that, and this person you met with, that I think specific governments will want to have their use cases and their data for no other reason than the citizenry's imagine that they're protecting themselves and having all of their data for, which might be their, a social security type data or those sort of things, and some healthcare data, although the healthcare data doesn't all sit in government systems, as most people know. So there's going to be a little bit of bleeding across that. But I think that's likely going to be the case. But not every one of the countries is going to develop their own LLM for their country. I think they'll end up licensing instances of it and then ultimately applications of it for specific use cases in those countries.
Robert, there's a stat I came across recently saying that 75% of all S&P 500 companies were mentioning AI as a buzzword in their earning calls.
Mhm.
Jamie Dimon said recently, this AI thing is not a hype. This is real. When we had the internet bubble the first time around, when you founded Vista, that was hype. This thing, AI, is not a hype, it's real. Gardner, on the other hand, the famous inventors of the hype cycle, just published recently that we are at the peak of inflated expectation when it comes at least to generative AI. So, what is your view? Any word of caution, or where are we in the hype cycle?
That's a great question. When I look at the actual productivity gains that can be realized from utilizing Gen AI in specific environments, again, the use cases and environments that I live in, it has tremendous capacity. It actually has the potential to deliver even enhanced ROI to the customer set utilizing this technology. So that's point one. Point two, we are also seeing that it actually expands the TAM of certain of the businesses. In some cases, i.e., it now creates a product that they otherwise could not offer, or an expansion of a market that they otherwise could not reach. Now, the question is, do those markets have the capacity, the capability of paying? I'll call it the fair share of economic rent. That's to be determined. So it's hard to say where are you in the hype cycle, because they say, wait, this is great potential, but can they afford it? Can that customer actually afford what it takes to get this utility, even though it has an ROI? That is going to take some time to play out in my mind. With all that said, I will say that there are very few technologies that I have seen that have that sort of enhancement in the ROI for the products that they can. Just remember, I actually think it's going to be the companies that have stuff that they can apply Gen AI to that have the potential to capture the vast majority of the economic rent. Now, if you don't have something to apply it to, you've now got to think about how do you either create a new market or disintermediate somebody who's already in that market. And if people haven't created the sovereignty and dominion of the data, it has a higher likelihood of disintermediating that market. If they own that data or they own the use case of it, and the industry participants understand that they are better off with trusted providers of Gen AI solutions who have been managing their data and keeping their data safe for decades in many cases, they'll capture the vast majority of the economic rent long term. All of these cycles, as you know, occur. There's this massive, ebullience early on. At some point in time, the realization comes to, wait a minute, it's not all that we say, oh, I don't need all of that. I just need this portion of it applied to my business. Those who sit at the highest level in the horizontal layers, I'm sure they're going to want to boil the ocean in many cases, but they're going to figure out there's going to be certain lakes that they can't boil, right? Because they actually don't have the construct and the data sets to boil those lakes. But there may be enough of the, call it the ocean in that case, that will satisfy, their ambitions. But that's how I think this is going to play out. I don't know if we're early in the hype cycle. It truly has been hyped up, but when I look at the productivity of it, it is a very productive tool. And the key is going to be the utilization of these tools applied to systems and infrastructures and ecosystems that currently exist that ultimately will yield to economic value for shareholders.
Look, Robert, we at Moonfare, I couldn't agree more. We are in the same camp. And we believe it's really an enormous revolution that is still far ahead of us. You're closing right now, or you're in the closing of your eighth flagship fund, which I believe will be your largest one to date. And I'm happy to say that Moonfare also has been part of this fundraise. Now, talking about how to capture from an individual investor perspective the enormous value creation that has happening and will be enabled by AI. Some people we talk to tell us, "Hey, I'm playing the Magnificent Seven. Yeah, I've been doing a great living, and they are going up and up and up. Why should I invest into a private equity fund that focuses on AI?" So let's make the case for how best to capture the value creation from an investor standpoint. Is it through public markets? Is it sufficient through public markets, or would you agree that there is no way to get around private markets investing?
Yeah, I think, it's important to remember that still about 97% of software companies are private. And, the vast majority of investors and consumers don't really know that because, people don't necessarily talk about the enterprise software, which makes up the bulk of the marketplaces are private companies. And so, being an investor, in Vista and firms like ours that are actually focused on the private markets, I think is an essential part of participating in ultimately this overall industry. Like I said, those who actually have stuff, in this case, software or companies that they can apply Gen AI to, will reap the benefits longer term more than just playing what I'll call the cycles of the early tool providers of these solution sets. There will be a new equilibrium that occurs, and again, as you talked about, sure, the first wave will come, and people are, wow, and I'm going to get in the hardware and going to some of the infrastructure providers, and great. But at some point in time, there's going to be that realization that, there's overcapacity for what is the actual demand in these markets, because in some cases you actually don't need these large scale LLMs to solve the problems of specific businesses and industries, and you need something that's actually sized appropriately at the proper cost and with the right level of utility, and most importantly, the right data and workflows around those data to actually deliver high value solution sets to that industry. And that ultimately will be the equilibrium that occurs, and each of those industries and companies in those industries will find that equilibrium as they create and get more utility of utilizing these solution sets. That's likely going to happen.
Look, many people are concerned, and I guess for good reasons, what's happening with many, many jobs that will be in one or the other way disrupted through AI. I don't want to talk about this topic, but I want to lean on your brain and experience and forward looking thinking. What happens to the private equity industry? What do you think if you think like 10, 15 years from now? Let's take a very long time span. How will your firm look differently? Will we still have analysts? Will a legal firm have junior people, or is this being done by others and only the most senior deal makers, visionary people like you will survive in the private equity industry? How do you see the impact on firms like yours, on the KKRs, Blackstones, and all these large asset managers?
Yeah, as we all become more familiar with not only these tools, but the utility of these tools, we will rely on them more. We a bunch of tests now to say, okay, what can we learn by ingesting this data into our system and analyzing it relative to we know have been successful outcomes in the past over the last 25 years, 24, 25 years. So there will be that migration, no question about it. You will probably need fewer people, no question about that. If you want to operate at the same level, in some cases, you may say, guess what? I now can expand my operational capabilities. And rather than in our case, we have about a 4.5% sell activity of the deals that we see in the deals that we do. Can you raise that to 6.5, 7.5 because you can process more? That's one of the questions that we have to identify and understand. And I think everyone in our industry is going to go through that. Some earlier than others. Some are going to say, "I'm just keep doing what I'm doing and leave and not invest in the future." We take a different approach, of course, being in software and technology, and say it is important to not only understand but invest in the future and invest in our capabilities and understanding and building our what we call our value practices. We have a whole Gen AI team now, and across our organization, well, everyone is now, Gen AI enabled in one shape, form, or another. But how do we use this and utilize it across every one of the portfolio companies and across Vista in particular, so that we can drive productivity, enhance understanding, and in many cases, deliver back to our customer base, in some cases, investors, in some cases, portfolio companies, an enhanced level of understanding or service or best practices that can be delivered. So, our industry will absolutely transform. I think different firms are going to take different approaches. Some are going to say, "Listen, I'm going to grow and utilize this technology just like I did when we went to mobile first and went to cloud." And some are going to be laggards in that construct. And I think their portfolio companies ultimately will suffer as a result of it.
Well, but let's change gears a bit. Vista is an incredible success story. The firm has grown tremendously over the past years, and a very important part of your success is your culture to develop talent from scratch. You recently said that 85% of all your VPs started as an analyst or associate. I'm personally fascinated and thinking a lot about culture at Moonfare, and I want to learn from others. Share with us, please, how do you maintain this unique culture, the learning ethos that is needed at the firm, the adaptation of new tools like generative AI? How do you motivate all these people from a with a different mindset and set of values as a next generation? How do you motivate them over and above just cash and carry?
Sure, sure. I mean, there's layers of this. One of the first thing I like to say, we do a whole talent evaluation, and we actually start with people as interns, and 1 and 2 and 3 year interns then come on as analysts, associates, etc. And we think that's important because they get to know us, we get to know them, we get to know their capabilities. We also have assessments, very standardized assessments that we use for aptitude and personality profile. And then we have, of course, review processes. In the junior years, it's a couple times a year, senior, one time a year, to evaluate strengths, weaknesses, things we're going to enhance and we're going to develop, and then driving what I'll call a culture of performance in across the organization, which, as requires really enhancing how folks are doing well, and when people aren't doing so well, you have to make some trims and move them on to other things, and that won't be in Vista any longer. So there's all those components of it, but I think all of it, and this, comes from just being very dedicated and focused. So I always like to say my job is really to create an environment where people can become their best selves. So you have to create environments where you can hear their voice. We can understand their capabilities. And frankly, you have to assess their capabilities. And then from that assessment, make judgments around, are they the right people for the business going forward? Some cases they were the right people for the business in the past. And that's part of the hard decisions, as you know, of being a senior manager. But it is an important part in doing that well, because that's ultimately what we want and expect of our portfolio companies. We have very intentional conversations with the managers of our portfolio companies, and how we assess, first of all, how they assess their management teams, and how we assess their management teams, and who are the folks who have, much more upside, who are the folks who have reached their potential and probably need to go do something else, and who are the folks we still need to develop and see if they have more capability. And it has to be just a very active, active process. In enterprise software, our value is created by people today. At some point in time, some of our values are going to be created by Gen AI and agents, but it's created by people, and so we have to have very thoughtful and deliberate processes for evaluating people, developing people, and encouraging them in some cases to move forward in their organization, or in some cases move along to outside of Vista. But that's the nature of management, and I think that's a big part of what we have to do. And some days is tougher than others, but there's no greater delight than to see people who you brought in as interns being very successful, becoming managing directors, up through that VP rank, like we talked about, becoming senior VPs and managing directors, and in some cases now, co-heads of our funds. Who've developed great habits about analyzing deals, underwriting, value creation, and frankly, being great stewards of capital, and of course, the Vista brand.
Robert, I said it earlier during this session today. Your name, you as a person, you stand for inclusion, you stand for diversity. You have an incredible, approach to social responsibility with all your activities as a philanthropist. Let me ask you about a very recent and still nascent development in the industry. Some private equity players in the market came up with employee ownership programs.
Mhm.
KKR has used this equity sharing model for a number of their transactions over the past 5 years as one example. And
Mhm.
typically, employees have ended up with some 10% of the company ownership,
Mhm.
a stake that finally, then, in many cases, translated really into meaningful money for, let's say, the less privileged persons and individuals out there. What is your view on it? Are you at Vista thinking about doing something similar? Is it industry specific maybe, and doesn't apply so much to software where you have a very different salary level? What is your thinking there?
Yeah, I think and you hit a portion of it. Our salary levels in software are typically about two and a half times what is in a specific geography. There, the normalized wages or levels of standards of pay, and so software typically gets paid above that level. All that said, I know at the Vista level, for instance, at Vista we have carry for all programs, where all employees participate in carry programs, which we think continues to motivate. And at portfolio companies, it's interesting, Stefan, we have done analysis a few times around this. And when we do surveys, many companies, many employees want cash. And so we say, fine, in some cases, the business that they're operating, or the part of the business they're working on, and cash and bonuses is actually a better incentive for them. And when we've done our surveys, some are saying, yeah, that's great, but I'd rather have cash that I can spend today. And in some cases, they'd rather have equity. But we typically, in our portfolio companies, I don't know, 10 to 20% of the ownership of the business is owned by management. Now, how far down it goes, it all depends on the specific company. Some cases it goes all the way down to every employee. Some cases it's, senior managers and folks. But like all things, it's a highly competitive labor environment. And so you have to find what is the right equilibrium in that environment for that company, for the work they do to attract the highest quality employees. Remember, we talked about as part of this, inclusion piece. We do these aptitude tests and personality profiles across all portfolio companies. So we find the strongest talent, most capable, and of course, you have to pay them, what it takes to retain them in the businesses. And the good news about enterprise software, typically you can do that quite well. And of course, sometimes it's a mix of cash and in terms of bonuses or salary, as well as other benefits. And in some cases, it's equity. But we think we do a good job now, having affected over 600 transactions in the last 24 years or so, in balancing that right and delivering what I think is the right quantum of compensation for the very talented employees who work in our companies.
You know, Robert, it's funny that you are saying this because my wife keeps on telling me the children can't eat paper. They need cash. So I understand the focus on cash and bonus. Yeah, look, it has been terrific. Unfortunately, we are close to the end of our conversation. But before we close up here, I want to ask you one final question that I ask everyone because I believe it gives us and the audience the opportunity to really learn from the best entrepreneurs and deal makers, also from a private standpoint. What in would you, if you would look back, is there any piece of advice that you would give to your younger self?
Hmm. Yeah, I like all things. I feel very grateful that I've had great opportunities to meet and learn from just spectacularly brilliant people. In some cases, it's science. In some cases, it's business. Some cases, technology. In some cases, it's in finance. Uh, and the only advice that I would continue to support is just remain curious, which I do, which I am, and just to continue to expand the aperture of relationships early, and from those learn from people who are applying newer thoughts and technologies and see how they apply to the work and the business that you were in. It's something that I do every day. I would probably continue to encourage my younger self to do that, because I think that's what actually helps you remain optimistic on the one hand, and on the second, actually bring the best thoughts into the business that you're focused on. And again, don't bite off too much. Just focus on the things that really create value and build systems around that, which is the approach that I've taken.
Robert, I want to thank you so much for being with us today, for devoting your precious time. I find it a fascinating and truly insightful discussion with you. Enjoyed it very, very much. And to everyone who dialed in, thank you so much for your participation. Would be great to see you at one of our next deal talks. Stay healthy. Thanks a lot.
Great. Thank you, Stefan.
Thank you, Robert.